everybody, we have done it again. Opendoor Technology has done it again. We're proving everybody wrong. We're still going up. Bad earnings doesn't matter because we're preparing for the future. We have a good CEO and our stock is doing really well. I'm going to show you some news and then we're going to look at the chart. Let's go. First thing I want to show you is the Opendoor Stock insider trading. Before, we were having a lot of sales for Opendoor insider trading, and the last one was on July 23rd, 2025. And now we're starting to get a lot of purchases for shares. The first one was August 28th, September 15th, September 30th, and then November 12th. So that's when it was reported, but it was bought before then. It was bought on November 11th. And he told everybody that he was going to do it. The president bought 28,000 shares on August 28th and another 1,600 shares on August 28th at $4.42 area. Wu bought 451,000 shares September 11th, $6.65. That's the key area I was telling you before. People kept saying, oh, it's going to go down to $3, $4. I said, a lot of people are bought in around the $6 area. Then I said, Jane Street is in around the $9 area. So don't be mistaken that this stock is going to go below where they bought in at. You think they're going to take a loss under $4.27, under $6.65, and Jane Street is going to take a loss at that $9 area where they bought in? Not going to happen. That's why I was confident that it's only a matter of time before Opendoor go back up at least above where they bought it from. Now, we want much, much higher than that, $10, $20, $33, $82, but it was no way that it was going to stay below where they bought in at. And then we have November 11th, the CEO bought 125,000 shares. So that's insider trading. And as you can see, this is how the chart looks. Back in 2021, it was way up here. The stock price, $21, came down. Then a lot of insider trading was selling down here. And now we're starting to get some buys here for the insider trading area right here around August 11th. August 21, and it's starting to move up. Price starting to move up. And once again, I just want to go over about the warrants. The warrants helped a lot. That was a key thing. A lot of people were saying that in the comments, and I had to look over it. Why a lot of people are talking about how important the warrants are. Then when I looked over the warrant, that's when I realized how important they were. It's helping the stock move up higher. The warrants was key. The CEO, Opendoor, knew exactly what they were doing as far as these warrants getting the short sellers out. It's creating a forced action, increase risk and cost. Short sellers face potential losses if the stock price rises due to the added value of the warrants, or if a short squeeze is triggered. The more this price increases, the short sellers are feeling it. Hedging difficulties. Warrants are a form of derivative that cannot always be easily hedged with standard options, creating a mismatch in short sellers' positions and expanding their risk exposure. Potential for a short squeeze. Here we go. This is the good stuff right here. Potential for a short squeeze for Opendoor. The high level of short interest in Opendoor, over 20% of the float, that's a lot, makes the stock susceptible to a short squeeze. That's what we want, where short sellers are forced to buy back shares rapidly to cover their positions, causing the price to surge. And that's what I was saying in Discord. If you're in my Discord, you remember this. If you haven't joined the Discord, go ahead and join the Discord. What are we waiting for? A lot of people are in there for Opendoor Technology, and we're one big happy family, right? All making money together, thousands of dollars together. The end of the day for Opendoor today, that was somewhat of a short squeeze. I'll show you what I'm talking about very soon on the chart. And this article was dated November 10th, and it says Opendoor has a plan to complicate life for short sellers betting against the meme stock. I think I mentioned this in the last video, but there's a lot of hints and clues that a short squeeze could be coming. Opendoor stock dropped last week after lackluster earnings, but their earnings also revealed a plan that could make things tough for short sellers. That's the warrants. And here we go for another clue, another hint that short sellers were possibly going to be in trouble within the next coming days. CEO said on the call that he liked the idea of causing pain to shorts. So you have a CEO who do not like short sellers at all. He said he wants to cause pain to the shorts. With these warrants, pretty much was the blueprint of causing pain, and he delivered it. And once again, when Opendoor pays a dividend, short sellers will have to deliver the warrants to their original lender. they borrowed the shares from. Some short sellers could close out their position entirely rather than deal with the headache buying back the stock and pushing the price up. So the short sellers are disappearing. How long will they disappear? Will they come back at another date? We don't know. But at the moment, the short sellers are trying to get out of Opendoor because they don't want to deal with the headache. And if they are in Opendoor, they're going to have to buy back the stock. And when that happens, it's going to push the price up. Opendoor stock is still a fairly popular target for short sellers, with shorts accounting for 22.5% of the float, while the stock has risen almost 400% year to date. So it's like this. Short sellers are thinking in this way. A stock that came from 50 cents all the way to $10, easy target for a short sell. So they think it's a meme stock. This is just hype. So this is going to be easy short. And they shorted it, came down a good amount. And did they make their money? They made some decent money. If they shorted it from $10, the stock actually went from $10 to $4. But the thing about it now, earnings for Opendoor is over. The worst is kind of like behind us, right? In my opinion, as long as the housing market keeps recovering and Opendoor delivers on their platform and gain more customers, Opendoor would just keep going up. Kind of like that stock, Carvana. And now let me show you this. This is a post from Eric Jackson, August 27th. He wrote on February 28th, 2023, with Carvana at $9.42 after bottoming out at $3.50. I emailed Ernie Garcia Jr. He kindly wrote back. A few weeks ago, it hit $413. Carvana was just as special at $3.52 and $9.42 as it is now. Now this is about Carvana. The only reason I brought this up is because the price targets that we have here is kind of similar to what we see in Opendoor at the moment. Opendoor went down to around $4. Didn't go to $3.50, but it went down to around $4, low $5. And now Opendoor, we're right around that $9 area. So that's very similar if you want to compare Carvana and Opendoor. Carvana went to $3.50. Opendoor went down to around high $4. Carvana went to $9.42. Opendoor is right around that price right now, $9.30 to $9.40. And what is Carvana at now? This is an old post, but it hit $413 when this post was written. So can Opendoor hit $413? I don't know. I don't know if that's going to happen or not. We got to take it one day at a time. But I just wanted to show you because those are some very close price similarities from Carvana and Opendoor. And you have the same guy behind it, Eric Jackson. Now let's look at the weekly chart. Everybody's been waiting for the chart. Look at the technicals, the resistance, the support. Because the supports and resistance I've been drawing here recently been pretty accurate. Very accurate. More accurate than I thought. Because even somebody in the comments wrote recently, Opendoor went to 930. And then they said, just like you said. And I was like, oh, that's good. And then when I look at the chart, I did have a line here at 930 area. And I didn't even know it. I didn't even know I had a line here at 930. So that's pretty amazing how accurate some of these resistance and supports I'm drawing on here. I just want to note that out, that, support and resistance is very important. So in the weekly chart, this is what we have here. We have a nice green candle on the chart. The RSI still looks good. It looks good. If you want to compare it, you can look at this RSI right here on August 8th, kind of in the same position as the one we have here on November 7th. The RSI started to come up here on November 7th, and the RSI started to come up here on August 8th. The only difference is the MACD here on August 1st was much, much lower, and here in November 7th is pretty high. So to get a move like this, it probably won't happen because the MACD is so high, but we still can get a nice move because the RSI is in a good spot. Not overbought, and it's starting to come up past the 70, when sometimes can be very bullish when it's entering the 70. Not when it's been in the 70 area for a long time or leaving the 70 area, but when it's entering the 70, stocks can get really bullish. As you can see here, it entered 70 here, and that was the first candlestick for a pump back in August 15th. And here's the daily chart. A couple days ago, we were talking about 3 strikes or 3 soldiers going up, and now we have 4 soldiers going up, right? 4 green candles on the daily chart, and we're at the resistance that I drew. So it looks like I drew 937 on the chart for our next resistance, and we pretty much hit that because I drew 930 resistance, and we closed at exactly $9.37. So I don't know how I did that, but yeah, we hit 937. The high was 946, and right now after hours 931, 932. And the daily chart for Opendoor is my favorite thing to look at because we can go much higher. MACD still low, just like here in a weekly. MACD was low, and you saw how we pumped. Daily chart, very similar thing, right? Very similar. MACD low, RSI pushing up. Haven't tested 70 yet, so we still have room to grow. This is why I keep telling you over and over again. The technicals show we have room to grow. It doesn't mean 100% that we're going to go up, but it just means that we have room to go higher. We can go higher if the volume and the buys come through. Not too many people are going to sell because we have room to grow. That's what I mean. On the 4 hour chart, we're starting to get a little bit exhausted on the 4 hour chart. We are in the overbought territory on the 4 hour. The MACD actually still has a little bit room to grow. It can go up some more if it wants to, but the RSI is very important for technicals, but we can still go up. We can still go up. Right here, as you can see, back in July, we went up a lot. We're overbought. RSI went up, came back down, up, came back down, kept going up and come back down. And that can happen if you have a lot of volume. So just because we're high on the RSI 4 hour doesn't mean we can't go up anymore. Just when we go down some on the RSI, we got to make sure we have enough volume to bring that indicator back up again, because you don't want to start a downtrend. What I'm looking at here is that we do have resistance at the 950. Maybe that's why we touched it and then came back down. I think after hours we went to 948 or close to 950, and then we came down. So we do have resistance at exactly this area right here. Doesn't mean it's the end of the world and we're going back down to a downtrend. It just means there's some resistance right there. The next resistance is going to be as I was saying in my stock market live on YouTube that I did earlier. It's not really to the $10 area. That's what's so amazing about Opendoor now, is that we're at a point that we can actually trade the $10 area and not have to worry about too much selling, because once we break the 950, there's not too much resistance after 950. There's one more actually, but it's pretty close to 950. I didn't draw it in there. There's one more here at the 976. So I didn't draw it in there because it's so close to 950, but we do have one at 950, 976. Then after 976, might be a little bump at the $10 if we touch it, but it will be resistance at 1023. So what could happen as a scenario, if we start getting a lot of volume, we could go to the 950, have some resistance there, and then have some resistance at 975. And if we break and hold that 975, the 976 area, it's almost imminent that we'll break that $10. Now, when we break that $10, that maybe we'll go to 1005, 1006, 1010 in a huge uptrend, in a huge volume rush, right? Because we broke the $10. But then we may come back down under $10 for a little bit because there is a resistance there. So that's not guaranteed. It's just a scenario at what could happen. So we have resistance at 946, 976, and then 1023. $10 is not really a resistance there, but just because it's a $10 straight even kind of number, a lot of people like to sell at 5, 10, 15, 20, 25, 30 like that. So once we hit that $10, we could see resistance there, but the real resistance is not going to be till 1023. Now let's look at the support just in case we start to fall down some, just in case there's some profit taking tomorrow or on Friday. We got to see what the news is going to look like, because I think the shutdown may be ending today or tomorrow. So data reports are going to come out. Those data reports are going to be crucial, especially for the stocks that are overbought, like the IT stocks, the AI stocks. It's going to be important for those, because if the data reports don't look good, you're going to see some of those stocks come down because they're kind of overbought. But stocks that aren't overbought, you don't have to worry about them too much, because they're already oversold already or pretty low, so they won't go down too much more. But the stocks that are overbought, the technology stocks, you could have some problem with them if the data reports aren't that great. But if the data reports are good, hey, it may go up some more. Nvidia, Qs, SPY, up and away. But for the support, the first one we're looking at is going to be the 915 area, 915, 916. Next one is going to be at the 904, 905 area, right around there. And then we're looking at the 890 area for support. So we have 3 areas of support, and that's going to be the intraday support from today: 890, 904, and 916. If it has like a big dip, hopefully it doesn't, but if it does have a big dip, Then we're talking about a support at 830, 831, 830. If it has a big dip, that would be a $1 decrease from where we're at now. So a big dip will be around 830. And if you want to buy shares or load up some more shares, that would be the area to do it, around the low $8 area. But if it doesn't go down that far, we're talking about 890, 904, and 916. Resistance is going to be 948, 950, 975, and then small bump in the road at $10, or it could be a huge one. We don't know. Don't know how many people are going to sell once we hit $10, but the big one is going to be at $10.23 resistance for Opendoor Technology. And as you can see, here's Lennar. Lennar didn't have a pretty good day like Opendoor. That's how you know Opendoor is doing something special. As I always say, they're in the same sector, so they can move at the same time, but they're totally different companies, totally different functions for their company. So Opendoor can still go up, even though when Lennar goes down, vice versa, right? But there's a lot of things going on Opendoor right now. The reason why Opendoor is going up and Lennar will go down. We have the CEO buying shares. We have the warrants going on. We have a lot of things going on. We have the shorts trying to get out because they're losing money. And then you have shorts trying to buy back shares, pushing the price even higher. And that's what's going on. Oh yeah, real quick. This is what I was saying earlier about when the squeeze was going on. These were natural movements right here today. And we went from $8.22 the low, and then we had a up, down, consolidation, up, down, consolidation, up, then down to consolidation, right? And we had higher lows, right? But this right here was part of a squeeze. This was actually a squeeze right here going on. It wasn't like a big squeeze like a GameStop AMC squeeze, but it's like a mini squeeze, intraday squeeze. And you can see it right here. It's right in the volume. All these green bars, pretty much all buys. And it made the short sellers panic. They're panicking right here. So they're buying back their shares, pushing it higher. Institutions, insiders, retail, all buying shares. You got a squeeze going on. And it's squeezing right here. Then at exactly 325 during power hour, that was a major intraday squeeze. It went from 890 pretty much to 948 in very short time. So the whole squeeze in general was 858 to 948, almost a whole dollar in just an hour and 15 minutes almost. That's how a squeeze kind of looks, like a mini squeeze. When you're talking about a major squeeze, we're talking about, high amounts of volume, 500 million volume, 700 million volume, 1 billion volume. That's going to be a major squeeze. And if there's not a lot of selling in that squeeze, that's when you're talking about a huge, huge move. If there's not a lot of selling and you have 500 million, 1 billion volume, you can go from $10 to $15, $20 in one day. That's a huge move right there. But that's very rare. That's very rare. It happened before, but it's very rare. And Opendoor really doesn't need that. The way we're moving is a good pace for me. All right, everybody, great day in Opendoor Technology. And if you haven't subscribed yet, subscribe, join the Discord. Thank you for watching. Thanks for the support. Thanks for everybody who joined the Opendoor Live that I create every once in a while. Thanks for joining. Thanks for watching. And thanks for the support in that live. Everybody have a great night. Take care.